Imagine watching from the sidelines as Chinese stocks skyrocket, with top funds surging over 30% in just 1 month. The fear of missing out on this explosive growth is real, and it's driving investors into a frenzy. What if I told you that you could have been one of them, cashing in on gains of over 189% with a single stock like QuantaSing? That's not a hypothetical, it's what happened. And the real question is, will you let another opportunity slip through your fingers, or are you ready to ride this wave?
Greed and fear. Those are the emotions that move the market, and right now, greed is winning. China's market is roaring back to life with a vengeance, fueled by a combination of government stimulus, undervaluation, and cutting-edge AI technology. But where there's greed, there's also risk. We're going to show you how to navigate these waters, identifying not just the potential winners, but also the pitfalls that could wipe out your gains in an instant.
Today, we're broadcasting from one of the most iconic buildings in global finance, the New York Stock Exchange, NYSE. This historic location isn't just a building, it's the beating heart of the global financial world, where fortunes are made and lost in seconds. As we stand in front of its towering columns, it's impossible not to feel the weight of financial history that has shaped markets for over 200 years. Inside, the trading floor buzzes with the energy of stocks like QuantaSing, which recently saw an incredible rally driven by China's market surge.
Did you know that there are over 200 Chinese companies listed on U.S. exchanges, with a market value of hundreds of billions of dollars? These companies aren't just players. They're game changers in industries ranging from technology to consumer goods. A recent report from Goldman Sachs even highlighted that China's renewed focus on AI and economic reforms could spark a new wave of growth that mirrors the tech boom of the early 2000s. But with great opportunity comes great risk, and these dual-listed stocks are at the center of both ambition and geopolitical tension.
Speaking of risks and rewards, let's talk about China's explosive market rally. Some of the top-performing Chinese funds have surged by more than 30% in the past month alone, driven by aggressive government stimulus and the undervaluation of key sectors. In fact, the best-performing fund on our list is up a staggering 38% in just 1 month. Imagine catching that kind of upside in your portfolio. It's enough to make any investor's pulse race with excitement.
Market momentum this strong has a way of pulling everyone in. And today we're diving into how QuantaSing saw a 189% gain in just 9 trading days, and how you can use AI to find similar breakout stocks before they take off. If you're holding back because of the risks, don't worry. We'll cover those in our upcoming episode about China-Taiwan tensions and the impact they could have on your investments.
In today's episode, we'll break down the catalysts behind China's market surge, analyze how AI is revolutionizing investment strategies, and reveal the steps you can take to ride this wave of growth effectively. Make sure to subscribe on Apple or Spotify so you don't miss our next deep dive into the risks and opportunities in the Chinese market. We'll even touch on how geopolitical factors like the China-Taiwan situation could play into your decision-making.
Remember the saying, in the stock market, money moves fastest when emotions run high? Today, it couldn't be more relevant as we explore the dynamics behind China's market rally and how stocks like QuantaSing are leading the charge. Let's get started on this exciting journey of profit, strategy, and smart investing.
China's market isn't just growing, it's booming in a way that has caught the attention of investors worldwide. What's unique this time is the rapid acceleration driven by a combination of strategic government policies, economic reforms, and advances in technology, especially AI. We're here to explore what's fueling this surge and what it means for global investors like you.
One of the most significant drivers is China's recent economic stimulus package, which includes tax cuts, lowered interest rates, and increased investment in infrastructure projects. These aren't just short-term fixes. They're strategic moves aimed at long-term growth, particularly in sectors like AI, manufacturing, and consumer goods. China is positioning itself as a global leader in these areas, drawing comparisons to past market rallies that were driven by similar robust interventions.
The role of AI in this rally is critical. China's massive investment in AI isn't just about local industries, it's reshaping global supply chains and making Chinese companies indispensable in cutting-edge sectors like autonomous vehicles, digital finance, and smart manufacturing. The implications of this shift are huge, not just for China but for global investors looking for high-growth opportunities. The surge in China's market has been nothing short of extraordinary, driven by a series of powerful catalysts that seem to be aligning perfectly. Let's start with the economic reforms and aggressive stimulus measures that have injected new life into this market. The Chinese government has lowered interest rates, introduced significant tax breaks, and poured massive investments into infrastructure projects. These moves aren't just about kickstarting the economy, they're strategic steps aimed at transforming China into a global leader in technology and innovation.
Goldman Sachs recently revised its outlook on the Chinese economy, predicting a stronger than expected recovery fueled by these targeted policies. They noted that China's push toward AI and advanced manufacturing is positioning it to lead the next wave of global growth. This is where the smart money is going, and investors who understand these dynamics stand to benefit the most. But with every market surge, there's a catch. The bigger the rise, the bigger the risks.
Speaking of risks, one of the biggest concerns on the minds of global investors is geopolitical tension, particularly the China-Taiwan situation. There's a palpable fear that if China escalates its stance on Taiwan, we could see a repeat of what happened with Russian assets during the Ukraine conflict. Entire portfolios could go to zero overnight. Yet, despite these fears, the inflow of capital into China hasn't slowed down. Investors are betting that the upside potential outweighs the geopolitical risks, at least for now.
Let's not forget the role of AI in this surge. China's massive investment in artificial intelligence isn't just about developing new technologies. It's about reshaping its entire economic landscape. By embedding AI into everything from manufacturing to financial services, China is creating a data-driven economy that's poised to dominate industries like autonomous vehicles, digital finance, and healthcare. This AI-first strategy is a game changer, and it's why so many tech-focused funds are outperforming in this rally.
And this brings us to the question that every investor is asking: is this rally sustainable? According to experts, while the momentum is strong, it's crucial to stay vigilant. J.P. Morgan recently highlighted that while China's market has significant upside, it's still vulnerable to policy shifts and external shocks. They suggest that the best strategy for investors is to remain agile, ready to pivot quickly if the geopolitical landscape changes or if economic signals start to weaken.
This is where AI can really make a difference. With tools that analyze market sentiment in real time, you can adapt to changes faster than ever before. Imagine having AI alert you to a sudden shift in sentiment or a spike in trading volumes before the broader market reacts. That's the kind of edge that technology can give you in today's fast-paced market. It's not just about knowing what to buy, it's about knowing when to act.
We saw this in action with QuantaSing. The moment we noticed a surge in AI-related sentiment and positive financial news, we acted fast. Our decision to enter the stock was based on a disciplined strategy that combined AI analysis with traditional fundamentals. This dual approach allowed us to capture that 189% gain in just 9 trading days. The key takeaway here is that when AI and strategy align, the results can be nothing short of spectacular.
The reality is, investing in a market as dynamic and volatile as China's requires a blend of insight, timing, and technology. While the potential for massive gains is there, so too is the risk of sudden downturns. That's why we'll continue to leverage AI tools and real-time data to navigate these waters, aiming to turn volatility into opportunity. And as we gear up for our next episode, where we'll dive deeper into the China-Taiwan risk, make sure to subscribe and follow us for real-time updates. Staying informed is your best defense in a market that moves this fast.
When it comes to finding the next breakout stock, AI is becoming a game changer, leveling the playing field for individual investors and giving them access to insights that were once only available to Wall Street pros. Our journey with QuantaSing wasn't just about analyzing traditional data, it was about using AI to turn that data into a predictive model that could signal when to act. This approach isn't just powerful, it's essential in today's fast-moving markets.
One of the key tools we utilized was TradingView, where we dug deep into the fundamental data of QuantaSing. We specifically look for companies with a low price to earnings, PE ratio, low price to sales, PS ratio, and high growth potential in both earnings per share, EPS, and revenue for the coming quarters. QuantaSing checked all these boxes, making it a prime candidate for a breakout stock.
What really set this trade apart was how we used ChatGPT in tandem with TradingView to validate the data. We fed ChatGPT all the latest reports, news updates, and the fundamental metrics we pulled from TradingView, including future estimates for EPS and revenue growth. This allowed us to cross-check the information and see if the fundamentals aligned with the company's potential. Having an AI validate these numbers made it easier to trust the data and gave us the confidence to move quickly when the stock's value became apparent.
The predictive analytics didn't just highlight where QuantaSing was undervalued. It forecasted where it could go based on upcoming financial performance. Our AI analysis pointed to a strong upside potential with a price target set at $4.62, representing a 131% gain. This predictive power was crucial in allowing us to get in early, capitalize on the momentum, and adjust our strategy as the stock exceeded expectations.
Using AI tools like ChatGPT to analyze fundamental data isn't just about seeing what's happening now, it's about projecting future growth. The AI cross-referenced market reports, trading data, and the estimates from TradingView to ensure that our expectations for EPS and revenue growth were realistic and in line with the company's strategic direction. This comprehensive approach to data analysis gave us a clear edge in spotting undervalued opportunities like QuantaSing.
It's this combination of AI validation and solid fundamental analysis that sets our strategy apart. By having AI verify the accuracy of data from sources like TradingView, we were able to see through the noise and focus on the metrics that truly mattered. This disciplined approach means that when we act, it's based on a foundation of verified data, reducing the risk of error and increasing our confidence in the trade.
Here's where it gets exciting for our listeners. You don't need a Wall Street-sized budget to start using these AI tools. Platforms like TradingView provide advanced analytics that allow retail investors to perform the same fundamental analysis we do, checking PE ratios, revenue growth estimates, and future EPS projections. By combining these tools with AI validation, you can make data-driven decisions that give you a significant edge in the market.
The true beauty of AI lies in its ability to adapt and learn as market conditions change. For example, if there's a sudden shift in economic data or a new earnings report is released, AI can quickly reanalyze the impact on your portfolio and suggest adjustments in real time. This kind of agility is essential in fast-moving markets, where even a slight delay in response can make the difference between a winning and a losing trade.
Imagine being able to detect a breakout before the news hits mainstream headlines, simply because your AI tools picked up on a subtle change in market sentiment or trading volumes. This is the strategic advantage AI provides. It turns data into actionable insights, enabling you to capitalize on opportunities as they arise. It's not just about knowing what to buy, it's about knowing when to buy it and when to cash in.
As we look ahead to the next big opportunities, the key takeaway is this: AI is not just a tool, it's a strategic advantage. If you're serious about maximizing your gains in a market that moves at lightning speed, integrating AI into your investment strategy is no longer optional. It's a necessity. And if you want to catch these breakout stocks in real time, make sure you're following us on Twitter at FinFrontierAI and subscribing to our podcast for the latest insights.
As we wrap up today's episode, let's take a moment to recap the key strategies we discussed. We dove into China's explosive market rally, analyzed the incredible 189% gain we made with QuantaSing, and revealed how AI tools are revolutionizing the way we approach stock trading. If there's one thing we hope you take away from this, it's that the combination of solid fundamentals and cutting-edge technology can open doors to extraordinary opportunities.
We also touched on the importance of being prepared for both the risks and rewards that come with investing in a dynamic market like China's. The key is to stay agile, use AI to validate your data, and make decisions based on a clear strategy. And remember, the journey doesn't stop here. We've got a deep dive coming up on the China-Taiwan risk that could impact the global markets in unpredictable ways, so you won't want to miss that.
If you haven't already, make sure to subscribe to the podcast on Apple, Spotify, or wherever you get your podcasts. By subscribing, you'll be the first to know about our latest episodes and get exclusive insights into how to navigate volatile markets like a pro. And the best way to stay up to date on real-time trades and opportunities is by following us on Twitter at FinFrontierAI. We post market-moving insights, breakout stock alerts, and trade updates right as they happen.
The financial landscape is changing faster than ever, and those who adapt will be the ones who thrive. Our mission is to equip you with the tools and strategies to turn these market shifts into profitable moves. So, if you're ready to take your investing game to the next level, hit that follow button and join our community of forward-thinking investors.
Let's close with a thought that captures today's discussion perfectly. In the stock market, what is comfortable is rarely profitable. The biggest gains often come when you step outside your comfort zone and take calculated risks based on solid data and AI-driven insights. Until next time, stay strategic, stay informed, and let's make money move. Before we close out today's episode, we need to remind you that all the financial information discussed reflects the market conditions at the time of this recording or the time of the tweets. Markets are dynamic and can change rapidly, so always ensure you verify real-time data and do your own research before making any investment decisions.
Following us on Twitter is the best way to stay updated in real time. We share crucial updates, trade alerts, and market insights as they happen, so you never miss an opportunity to act fast when the market shifts. This way, you'll always have the latest information to make informed decisions.
As for the music you heard in this episode, it's licensed under standard agreements. A special thanks to the artist Vibe Tracks for the track Crystal, provided under the YouTube Audio Library license. This track is available for use in your videos without the need for attribution, so feel free to enjoy it in your own projects.
Remember, while we do our best to provide accurate information and analysis, investing always involves risks, and past performance is never a guarantee of future results. Make sure you assess your own risk tolerance and consult with a financial advisor if necessary.
Thanks for tuning in, and remember, staying informed is your greatest asset in navigating the financial markets. Until next time, stay strategic, stay proactive, and keep following Finance Frontier AI for the best in AI-driven investment insights.